Well, it is the week of the giant. Nvidia earnings, supermicrocomputers, fabulous plan that we are waiting to hear from, along with some bank term funding program data. All that and a little bit more on Money Never Sleeps. Welcome back to Money Never Sleeps. Before we get into anything, neither I or Jweb is a financial advisor. Nothing we say is financial advice. Just a couple of guys who love talking about the markets. If you're going to make any decisions in the markets, do your own research or consult with your own financial advisor. With that said, done and out of the way, it's an interesting week this week. Nvidia earnings, and OPEX is over, but we still got VIX expiration, which ends on the 20th. So after market hours, we're probably going to get to the Nvidia earnings, I believe. They usually are post-market. I wouldn't think anything would change in that regard. And with VIX X, obviously things will be closed before market closes. Or as the market closes. So you probably wouldn't get a pop of any of that stuff till after. But the reason I bring this up is because Supermicrocomputer on Friday talks about something that they call a plan, which I think is just hilarious because they got 1 second left on the game clock, to use a Tim Walz analogy. And, you're down by 6, I guess. I don't know what Tim Walz used to say, but we're looking at this, and Supermicrocomputer, literally, their auditor said, we're not going to do it. You lost your auditor, you haven't released your 10K filing, and now you come up with a plan at the last second to just hope that you don't get delisted off the NASDAQ. I think this plan is just buying time. Maybe not for the supermicrocomputer either. Maybe it's buying time for, I don't know, a different stock that maybe they're buying, right? We don't necessarily know that until, we're in hindsight, but you can speculate. And that's all it is. It's all it is speculation. It can't be fact or anything like that. But to me, it seems like a move that if they had a plan in place, they would have submitted it already. Right now, it seems like it's a bit of talk. Outside of that, you're starting to get a bit of a news dump when it comes to NVIDIA's Blackwell chips, right? It's kind of funny when we start seeing some of this stuff start to hit the fan because obviously earnings are this week. And my next point, which I'll talk about after I show the Blackwell chips, is that the AI chips are overheating in servers. That's not a good look. Obviously, you're paying what? I think these things are like $40K a piece. If you're paying for $40,000 per chip, and obviously some of these contracts are massive, and the stuff's not working, what are you really paying for? Is the value really there? Right? It's a lot of, I think, that investors are going to have to really come to grips with. And again, I don't think necessarily a lot of investors believe in Nvidia. I think that the trade is just so fucked up between obviously how much it's ran up along with the yen carry trade that people are just hoping someone buys their bags. And I think that's why a lot of people are really hoping that Nvidia is able to push up a little bit more. And that's why the title of this video is, Can Nvidia Save the Market? Questions we have to ask ourselves. The thing is too, with a lot of people who are in on this trade, they have to get out of it. So when they get out of it, the dangerous thing is someone else is probably going to dump on them. And who's going to be the first one to dump, right? And once they all start piling out, it's going to be very similar to that yen carry trade that we saw back in August. I think people are going to start piling out extremely fast. And, just for, the sake of sharing a company that is on the verge of being delisted, Supermicrocomputer, I'm going to pull up this chart right now. We can easily see that once money starts to flow out in a big way, that's a bad chart there. Supermicrocomputer. You get start getting stuff like this. Sorry, I had to zoom out big time, but this is on the weekly chart. This is from March all the way to where we currently are here in November. It's a matter of time. Things move fast, especially if the value they realize isn't there. Also, if the liquidity is not there, right? This idea that retail is going to come in and save us, think it's a little bit overblown. And again, and this is the amazing thing too with the Trump trade, right? We're talking about Donald Trump coming into office. Things are going to be better. The economy is going to be saved. It's going to allow, we're getting QE. We're going to start seeing the markets pump. Are we getting QE? Are we going to see the markets pump? Is Trump really going to have, a wonderful first 2 years in office? I don't know. I don't think that's the case. And the reason I don't think that's the case is because what we're seeing here is a massive bubble that's highly concentrated in the equity markets. We're continuing to see bond erosion, and we have to wait and see at some point if this is going to be sustainable or not. I don't necessarily believe it's sustainable by any means, but when we look at the next chart, which is the Bank Term Funding Program, a lot of you guys know I love that chart because it is the one that's going to show us when liquidity in the system runs out. There's another one, obviously, reverse repo, and then there's the emergency repo, which I can't find. I'm also just maybe being a bit too lazy. But here it is. This is the Bank Term Funding Program. We can see that it is almost perfectly symmetrical. What happens on this side is happening on this side. So pump of liquidity, drain of liquidity, right? And what happened last week on Thursday, which if you guys have been watching the show, I've been talking about this, obviously for a period of time. I said we were looking at a $30 to $40 billion drain at some point. We got a $29.66 billion drain. That's 53% that it's dropped within one given week. That's massive. That's exactly what I was looking for. This is verification that we are starting to see excess liquidity pulled out of the banking system. The banks have less money to pile in. This is not what you want to see if you're bullish. It just isn't, right? I'll talk about crypto in a second because obviously there's things going on in crypto, which I'll just give you the facts. I'm not necessarily going to go into length about what we're seeing, or at least my opinion of it or one assessment of it. It's right here with the Bank Term Funding Program. We're continuing to go towards zero. In a matter of a week or two, there's a good chance we could be at zero once again for the Bank Term Funding Program. And that tells me that the Fed's pulled all the liquidity that this was providing to those banks. And this is a problem because back in February 2020, the Fed kind of did the same thing leading up to that major move that we saw in the markets. And that was a pull of the emergency repo. So there's a lot of things out there that kind of correlate. Is it the same? I don't know. But with Nvidia and SMCI being, very highly contentious things this week, along with Nvidia being in all three major indexes, watch out. I'm just saying, take precautions. I know a lot of people are probably going to be speculating on this, and maybe you make money, maybe you don't, maybe it goes up, maybe it goes down. We don't know. We really don't know. I say proceed with caution because these events are very, very dangerous in the market because they can swing so much back and forth. You could be getting in a trade on Palantir and Nvidia just fucks up everything else because it's in all three indexes, and then you just start seeing post market everything just get destroyed. And if you start seeing a major sell off, you're going to start seeing a lot of other things kind of play in hand. I'm not saying margin calls. Maybe in Japan, it's very possible in Japan with the yen carry trade that unwinding, and especially if the VIX starts to pump after VIX X. You could see a lot of money just being reallocated and moved into different places. And obviously, you probably see a big shift in the treasury market. And if you didn't, maybe that's a little bit more panic that we'll have down the road. But looking at this, that's what we're seeing. The Bank Term Funding Program is almost complete. Seeing that major drain tells me that we're probably going to see the rest of it drain in the coming weeks, either this week or next week. Probably next week would be my opinion, my guess, not opinion. Mainly because we are looking at this as being fairly symmetrical. It went up by 40 billion one week. Yeah, this was a $41 billion week, and then went up by 12 billion in the first week. So you'd probably see something along that line. Maybe 12 billion drain, or maybe 26 billion all at one time. Like I said, it's not perfectly symmetrical, but it's fairly symmetrical. So if we're looking at this in the matter of weeks, if it does want to really drain, and the way it pumped up 11 billion, almost 12 billion in the first week of its, initiation, draining 26.395 billion this week would not surprise me. And again, that data becomes available to us Thursday nights. So that's something that I will be looking forward to. And it's also at a time after we get the Nvidia earnings. Interesting week. Now, I do want to talk about Bitcoin because a lot of people are talking about Bitcoin. I don't know if I mean, maybe there are a lot of people buying Bitcoin. I really don't know. But it's important to note things that we're seeing when it comes to Bitcoin. And for me, what I'm seeing is something that I've seen before, and it's something that we continue to talk about. And maybe I'm wrong, but it seems like it's only happening during the early mornings, primarily Mondays, U.S. market hours. We are seeing the inflows. And when I say inflows, people are talking about the ETFs. Sure, maybe that's the case. It's the inflows of USDT from Binance to the Tether Treasury, USDT from Tether Treasury to Bitfinex, 500 million, my bad, USDT from Binance to Tether Treasury, 1 billion USDT here, and that was, 43 minutes ago. Continue to see this. There's another billion, so 2 hours ago, and obviously the market starts pumping. What we want to see is this stop, and then we want to see is kind of the curtailing of Bitcoin's price action, because that's going to tell us what the next move is. Now, obviously, they could print this into Wednesday, right? This could end up getting us to 100,000. People are really excited. The other thing is maybe it doesn't get there. Maybe it's very close, and people are just waiting for that 100K. But the reason why I keep bringing this up and why I think that people are probably getting played a little bit, or maybe they won't. Again, this is the markets. Markets will always play any willing participants. It's because we're going to look at the crypto funding rates right now. Max long. There we go. That's the current rates. Obviously, everything in red, not good. If you're, weary of some type of a sell-off, the red, not necessarily a good indication. If it was green and negative, you would probably see a squeeze. But you're deep in the red in a lot of these, and it's not just the current. I mean, if you look at the 1 day, I mean, it gets worse. The 1 day is what, 8 times more than what it should be, 5 to 8 times worse. This is like 9 times worse for Bitcoin. I'm looking at, in the 30-day, 2.45%. These are in the heavily positives. And then we look here on the year. These are very, very deep in the red, obviously positive funding rates. So shorts are being squeezed, obviously. But that doesn't mean that there isn't going to be that slingshot, right back down that is highly possible in this market. Now, I want to show this now. This is the Bitcoin exchange liquidation map. I want to go to the 30-day. Hopefully, the internet loads up fast enough. There we go. We're currently sitting here at 92,000. If we go all the way to 101, almost $102,000 per coin, we're looking at about $3.07 billion worth of cumulative short liquidation leverage. So you could make some money there if you're squeezing these shorts, right? 3 billion's, no small number. On the other side, just 79,000, you're looking at $8.83 billion worth of liquidation. At some point, there's going to be so much liquidity below in the price that you're going to see a major shift. When does that happen? Don't necessarily know. There is going to be a major move. I'm seeing the USDT continue to come in. I don't necessarily know how much retail is coming in here, except for those who are speculating, obviously using leverage. That's gonna, maybe catch them off guard. A lot of people probably not taking profit too, because they think it's going to continue to go up with the Trump trade, right? It's the Trump pump. But what happens when it's the Trump dump? And I'm not saying that we have to wait till January 21st for that to happen. What I'm saying is, the markets have certain indications that we're in a very one-sided position. That being said, we look at here across the exchanges, there's obviously a lot of liquidity here. And this only shows to about $79.5, $80,000 per coin. Imagine what that looks like all the way down to 50, 55. There's a lot of money to be eaten up on a push to the downside. Looking here on the 1 day, let's see the weekly, or the 30-day, my bad. We're looking at just Binance alone, 3.19 billion. Binance here, 1.15 billion. So it really begs to, the question, if this is just happening on Binance, and Binance where we're seeing a lot of the USDT as well, what purpose do they have? obviously pushing this up this high. There is no liquidations out there. And, the FTX was liquidating people left and right, and they were actually trading the market. Here, this is Binance, just nothing that's a short position can exist. So we'll see. We'll see what comes of this. And again, I think hindsight's going to be the key thing. And unfortunately, that's probably going to be at a point when a lot of people are maybe distraught, upset. But I think things do come to the surface. Things do come to fruition. Things that we've talked about. Things that people should be focusing on, but maybe aren't. Or maybe they're just denying the fact that this is a reality. And then, again, that's all I'm showing you. I'm not saying this is for fact what's happening. These are just things that you're not going to see on Twitter. You're not going to see anywhere else because no one wants to tell you this stuff. No one wants to do this work. That being said, looking across everything else, the last thing I really want to look at, and we can wrap it up because I really got not much more, is the VIX. And the reason I keep bringing up the VIX is because today is the day that I believe that we should see volatility somewhat bottom going into Wednesday. Doesn't have to by any means, but I want to just interestingly look at this setup, and then we can call it. Here we are. So obviously this is the weekly, not what I want to be looking at. I want to be looking at the daily and the key things that are happening here. Obviously you had a really good bounce on Thursday from that lower level, and it started pushing up. The UVIX was up 23% at one point on Friday. Again, OPEX, we were seeing a bit of a sell-off. We got a gap here. I wouldn't be surprised if this gap gets filled. You do have a little gap here, so maybe that does get filled at some point. Maybe down, up, or maybe just up, and something happens. We don't necessarily know. But again, the situation does remain the same. I think that we are going to see the VIX be more of a problem after Wednesday on. That's not even like a genius statement because obviously Nvidia's in a pretty contentious place. Jim Cramer is coming out defending Nvidia. They're having all the AI chips and Blackwell having issues with overheating. Supermicro computer has got a plan. The luckiest company in the world's got a plan. If you get the joke, it's still one of my favorite things that a CEO has ever said about their own company. But yeah, this is honestly, we're living in a VIX world after OPEX and after VIXX, after, the euphoria's kind of hit the market. We're looking at the S&P right now as well. And I know I got this pulled up. It doesn't have to happen, but this is kind of the same scenario that happened in February 2020 when you see how the S&P was climbing, and then it had this bounce, a little bit of an upthrust, and then it started to curtail and fall over. Does that have to happen? No, but it's just interesting to see. The chart is fairly similar to the fractal itself from that time period, but we're at 58.97. You had a pretty good move earlier. Maybe it tries to fill this gap right here. But I'll be honest with you, it's going to be harder and harder to push this up if Nvidia doesn't play ball with the market. It really does come down to Nvidia and how it performs on Wednesday. Obviously, the bond market as well. And then Bitcoin a little bit too. Nvidia, looking at it right now, it really wants to test to 132. It's possible. If it doesn't, then you're looking at something a lot higher, and it's very possible it can go either way coming this week. Looking at Tesla as well, a lot of people speculating on Trump and Tesla during this new admin. That being said, nothing necessarily changed in this chart too much. See if I can get this to go over here. I still think that we have ways to go for Tesla to the downside if this is an ABC corrective pattern. And again, that's if you broke out of the resistance, but you also just shot up straight. And we know that there is no stability in these moves, especially when people start buying up here. Other things globally, real quick, the DAX. See, the DAX is just barely hanging on there. It's within this channel. You look at the UK, what is this? The FTSE, the UK 100 index, right there, all just on the bottom trend line. Interesting. Nikkei is not doing the same. Nikkei is absolutely losing their level of support. Found the support, lost it, turned into resistance, came down, and the Hang Seng still not above the key level of support. It is turning into resistance unless they can get above that. So, we look at the major indexes, we look at everything that's kind of playing out. Interesting setups. just got to kind of wait, which hasn't been fun, but that's what I'm seeing across the board. I think that's going to wrap it up. I don't have much more that I want to go into outside of that. Obviously, the bond market's interesting. Uh, U.S. oil, not a lot of demand there. You keep finding these bounces, but at some point you're going to lose a 67.9 level, and once you do, we're probably going to be heading into a recession at that point. Just demand's going to drop. So things are out there, things to be paying attention to. Not just all green candles, not all sunshines and rainbows. Just important stuff that we continue to look on for. Reverse repos, something that we'll keep watching. Obviously, any news around supermicro computer, Nvidia is going to be fun the next few days. Outside of that, nothing too crazy. If you do want to find any of these charts, obviously just comment on these videos below. I'm not going to put any more on Twitter. No need. No one's going to believe them anyways. So just keep an eye on here. If you guys want to see them, we'll still cover them routinely on the show. I just want to make sure that, focusing energy in places that need to be focused. So that's it for today. Thank you guys for watching. Like I said, we'll be back Wednesday for the Nvidia earnings, and it's anyone's game till then. So take care, be safe, and we'll see you all next time.